All right, good evening, everyone. Welcome to the Hurley Investments Market View Commentary for the 12th of February. Those of you guys, don't forget Valentine's Day on Wednesday. Make sure you go get that special someone flowers, take her out to dinner, whatever you have. Also, don't forget Monday is a holiday, so we will push the commentary next week. Will be on Tuesday. And we'll get that out there so that you'll get the new string of emails so we can get you in. Trade findings and adjustments will be happening this Thursday. We've got that figured out, and we fixed the problem with GoToWebinar. Look for an email coming out tonight as you're getting registered for the trade findings and adjustments. All right, so very interesting conversation. And I've had this conversation, well, I heard this conversation last Friday. I was asked about it this morning, and I was asked about it in the afternoon. And it's the inflation conversation. So I'm going to ask you guys the same question. Has inflation come down, yes or no? So I'm only giving you a yes or no answer here. Has inflation come down, yes or no? Maud has a no. Stuart says no. Dave and David say no. Mary, what about you? Because I know where you guys live, so I'm trying to figure. Mary says no. Lance, I'm pretty sure you're not in the United States anymore, so I'm sure you know your no is no worldwide, right? Your no's no in I'm pretty sure in England, right? All right, so I kind of feel the same way. So here's where I'm trying to figure it out, right? Inflation conversation. Government, let's put it this way, government is saying inflation is coming down. What areas is inflation coming down in? Gas prices are one, agreed. Home prices, which isn't necessarily a good thing, I agree. Energy. Define energy, Jim, because in all honesty, my gas bill was higher than it's ever been before, meaning natural gas, heat the house, those kind of things. So define energy for me. You know what? Agree. Hotels and travel, airlines up, natural gas. So Jim, that's interesting because I agree. Natural gas is way down, yet I had, with it being colder, I had one of my higher bills for December than I've ever had. So natural gas is way down, but I'm not being charged less for natural gas year over year. In fact, I'm still more this year for my natural gas price than last year. And that is through Dominion. I get my natural gas through Dominion. Anything else? Inflation is up. You know, I should say this one, and you guys better agree with me. Where my inflation is up, and it's up significantly, kids. The price of kids, ridiculously high. So for me, I'm just going to tell you the price of kids and kid inflation through the roof. Absolutely through the roof. Unbelievable how expensive kids are getting for me nowadays. Gas prices obviously have come down. Sorry, I'm mixing you guys up. This is my mistake. Meat, hotels, and travel is up. I still feel, I'm going to call them durable goods, your fridges and those kind of things. For me, all those still seem up and still seem high. I was looking to do a new freezer for the cow meat. Ridiculous. What I want to pay $1,500, they want to charge me $3,800 for right now for a freezer. Anyone looked at car prices? Are car prices still high? Anyone looked at a car price recently? I can't believe, all I know is the car that I bought my wife 2 years ago, I can get for about $11,000 less today. I had someone type in that availability is better for cars, right? So the supply and demand is not as much. But I will tell you, if you're trying to buy a Ford Expedition, 2 years ago you paid around 98. When everything's said, it was about 106, and it looks like they're back down to about 88 right now, to 87, which is a ridiculous amount of money to pay for a car. But my wife got stuck in a beat up 19-person van for a bunch of years because that's what we were hauling around all of our kids in. Interesting conversation, because when it comes to inflation, the government is reporting significantly lower inflation year over year. So here's the but, right? But remember, we had 23% 1 year hike. Prices went up in 1 year by 23%. So yes, we have some higher inflation. Our inflation numbers are coming down. But when you look at that one single 23% inflation hike, to come down year over year doesn't make up for that one single year. Jim Kohler made a comment, rents are still high. Agreed. So year over year, inflation's coming down. But again, when you start at 23%, and that's the funny thing, so I think it was 23% for 1 year, right? And then we had 11% for the next year. And then last year was only what, 4.6 or 4.8? 4.3. Thank you, Dave. 4.3%. That tells us 34. We're still 38% higher than 2000 prices. So our prices are 30. It's ridiculous, right? 38.3% higher than 2000. But year over year, inflation's coming down. And that's the part to remember. So for those of you that were asking me about inflation, Kevin, inflation this, inflation that, what's going on? Why am I, for the question on via email, why won't they do more rate cuts? Why was I so anti-rate cuts? It's not that I'm anti-rate cuts, but when your inflation's up 38, and again, that's just from our numbers, 38.3% over the last 3 years from 2000 to 1, 2, and 3, 2021, 2022, 2023, huge inflation jumps. And for lack of a better term, we need some disinflation, right? We need things to go negative for a bunch of years. And we're just not there yet, which could be the reason why the Fed is not so excited when you put it in these type of terms. The Fed is not so excited to throw a bunch of rate hikes out there because we still have such high inflation over a period of time. If I were to ask you guys this question, how many more years do you think it'll take to level out our inflation, or to get us back to where we were in 2028? And that was another thing, I should have done that. Medical is still high, right? Professional services, that's another good one. Professional services. So how many years? How many years to get back to 2020-ish pricing? Never going to go back to their 2% dream. I agree. But boy, I think if we do get some rate hikes, that might make things cheaper pretty quickly. And I'm not an economist, so I'll be the first one to tell you I don't have a great answer. Can it happen to 2% inflation growth? I don't think so. I think fact of the matter is it won't go back completely because, I mean, we put trillions of dollars into our system, right? So if we put all these trillions of dollars into the system, it might be ridiculously hard, if not impossible, to get back to it. So I think that's where we're at, right? Interesting, because I agree with you guys. Probably never. And year over year, moving to 3 to 3.5% for the next decade. And here we are worried about stagflation and all these other things, right? Man alive, we got so much other stuff in the mix. I don't think we have a whole lot to worry about here with inflation coming down. That's kind of like a pipe dream, which helps you understand now where the Fed is at and why they're probably not lowering rates really quickly. They probably, again, 2, maybe 3 rates, and that might spark a whole lot more inflation. It might spark some stagflation. We hope it sparks some deflation, but if it sparks deflation, that usually also affects our pocketbooks. So just for the group, again, a yes or no question. Can you guys better understand the Fed position and where they're at trying to predict or feel the need to do a rate hike? I guess the question is, did this help you guys understand the rate hike scenario and why they might not be so excited to get things up and going here? Yes, thank you, Stuart. Anyone else? Did this provide an insight on why they maybe won't be so excited to raise rates and why we won't end up with that rate hike the way we think? All right, thank you, Maud. Thank you, Lance. Thank you, David. Okay, anyone have any questions about this? Would you like me to try to answer a question on your inflation as I was thinking about this for the week? Anyone want to throw me a question? Probably only having 2 or 3 rate cuts probably going to happen May or June because we don't want them to affect the election. And our rate cuts are probably not happening because of the inflation view that I just gave you. We just went up almost 40% over a 3-year period of time. And we have an economy that's out of whack. Inflation is coming down year over year, but durable goods, meat, hotels, rents, medical, professional services, they're all still extremely high. Excellent comment. And if I can go ahead and read that one. Excellent, excellent comment. We can't get ahead on our interest payments on our debts, so I don't see us getting out of issues unless there's some pain. Agreed. But remember, some of that pain is Fed pain. And it would help the Fed to lower interest rates so that they don't have to pay so much on the money that they borrow. But it's a double-edged sword. If they lower interest rates, we could have some things go shooting through the sky again. In fact, if they lower interest rates and home prices go up, my wife and I are going to have probably a bare knuckle beatdown with each other on selling this house and capturing a ridiculous amount of profit. And people keep telling me, well, where are you going to go? Man, I'm up to 160 acres up in Idaho. I will build me a mansion and live next to a river where I know I'm going to have water, fish, and food, meaning deer coming by my place whenever I want it to. But the short answer is we had some ridiculous pricing on our homes and could have possibly sold it at a ridiculously high price. If we see the home prices spike, it's probably the best price you're going to see on the sale of a home for the next decade. Or we go into hyperinflation and nothing matters. All right, no other questions coming in. Somewhat of what I wanted to show you the other day comes to Meta. Our entry point into Meta was very close right here in April. And we were getting into Meta for some people at $265. And we had a great run on Meta. And our first protection that really made us money was from 350 down to 300. Went sideways where we lost our money. And then right here on this drop, huge drop down. And our first pickup of Meta shares, again, for those that could afford an extra $100,000, our first 100 shares came right here. If you had 300, 400, or 500 shares of Meta, our first 100 shares came at that 200 level. So if you had 300 shares, it took almost a year and we added 33% more shares of stock. Our next staunch of shares came right here, where we added another 100 shares at that 160 mark. And we paid a little bit for it. And then our last 100 shares were not here at 89. They were closer to here at the 124. So for 300 shares of Meta, we doubled your share count and you had 600. For some people, we sold shares off, 100 shares up here, the 318, 320 level. And then here most recently for some people, we sold some shares off More down. I want to say it was 440. I don't remember, but it's in the 400s where we're taking a profit. This is how the collar trade has taken. But something to remember: 1 year, 2 years, and 9 months. 2 years and 9 months, a $91,000 to $94,000 investment, net has turned into over double that. Some of you have said, I don't understand why you're so excited. I don't get it. And I'm looking at some of our core holdings. So let me go over why we're so excited for this year and why we're not so excited for certain stocks. Apple, well, fully funded, and we've already had our return on Apple. Went down, came back up. It wasn't hit as hard as people thought. Apple's fully funded. This is why we're not so excited on Apple. We feel Apple has run its route. Bank of America, ecstatic. Absolutely ecstatic. 47, I'm very sure it was 53 or 56 intraday. It's run all the way down to 24. We can still see it back up to the 55s. No questions asked here. This is why we're excited, because Bank of America is still in its trough and still has room to come up to that 55 range. That is why we are ecstatic on Bank of America. For the couple people that are in Boeing, oh, Kevin, it's been down, it's been up. It's already where it needs to be. Unless you go back a little farther. And if you go back a little farther, you still have a doubling. And it's a pretty easy to see doubling. 209 to that 425 range. We still have a doubling in Boeing. We like this opportunity. I'm going to do the same thing here. I'm not going to change it because it'll make sense too if I put in Baidu. Look at the drop in Baidu. 350. We know this was a lot of exuberance. 280, 250, down, down, double bottom, up we go to the upside. This is why we are excited about our positions. If we go to Disney, and I'll stop going out 5 years because that's cheating. Why are we so excited about Disney? 85, back up. 185, 186. Why we can't wait for Disney. Under Armour. Another one of our favorites, right? 27.28. November 21. Up, down, up. It's why we look forward to seeing Under Armour moving higher. An opportunity that we typically don't see. Square. Does the chart look familiar? 270. 270. Came down on rumors. Micron. Oh, it's almost there, Kevin. It's almost where it needs to be. And yes, for the person that pointed it out, if we go out 5 years, oh, it's almost where it needs to be. You're at a triple top. Organic growth for Micron or stimulus growth for Micron? What do you think? Stimulus growth or organic growth? Of course it's going to be stimulus growth. I keep talking about Marathon Oil, right? I'm sticking it back out to 5 year. You want to see what it did last time it had its drops? Down to $2. Look at it run up to $32.50. If we take this out just a little bit, we see where it's been. Yes, it's built a base. Change it back to 3 years. 22 to 32. That's the doubling that it has in front of it. Organic growth. It's moving because it has an opportunity to move. With gas prices most definitely going up as we have to fill our reserves. So a couple people that said, so why don't you why aren't you talking as much about Google? Google's had its move. I don't see that big opportunity in Google anymore. Kevin, you like Under Armour over Target? Target has that move, but they're not doing things right. They were for a while to get up to the 250s. They were, with COVID, selling online. Their online sales has been ridiculous. Well, let's do more Costco. Let's get into Costco. The chart says it all. Fully valued. It's moved up from 391 to 722. I don't see that opportunity that you're talking to me about Costco. Tesla, Kevin, we should be doing more Tesla. The reason why I'm not excited about Tesla, even though it does have 400 opportunities, is Tesla is a news-driven, not necessarily a numbers-driven stock. I would put Tesla like biopharma. None of the fundamentals justify Tesla. For the person asking about NVIDIA, way high, way overbought. It had such ridiculous numbers. If you're a technical trader, you're in a full collar trade, giving a 750 covered call 3 months out in time, your expectation. If you're not, it's trading at 722, a 725 put out to the end of March is how I would protect NVIDIA. You can always add a short call if it doesn't make its earnings. Same thing with the person on Eli Lilly. Fully invested, hope for a new drug, an obesity drug. Eli Lilly had its earnings, but it's on its next one. It's so fully valued, it's a full collar trade. Unless we don't see some stock splits, we love the position we're in because of the opportunity that we see in the future. Very interesting article on our big picture where valuation and concentration risk collide. Please read through this to understand valuations and the market being stretched. It's not stretched for the same reasons of the 2000. The short turn about it really comes down to You have to be able to pick and choose. 7 mega caps went up last year. Some of them are still winning. And because they're still winning, what else are we looking at that we can see be the next mega cap stock positions? That's what you're looking for, and that's why we're in some of what we are in. Stuart, I got to do some research on that one before I answer it to you. And Stuart, long puts are expensive now when you get into $700 stocks, but do the math. If it's less, it's 5% or less of the value of the stock very easily can lose 15% or more over the next 4 weeks after its earnings event. So that's where you put it to the question. You could do out of the money, but then you got to add and calculate your risk accordingly. Dow Jones, still bullish, touching it. We've been running things bullish right now, but we are ready to put protection back on in the near future. S&P 500, still bullish. Overbought. Something to pay attention to. Will 5,000 hold as support as we go sideways and build a base? That'll be the question. And then we look at the NASDAQ, bullish and overbought. Will we hold? Well, of course we're not going to hold 16 because we're not there. Will we get above 16 and hold it? Probably not, at least looking at technicals. This week is a relatively quiet week. Nothing really on tap for earnings. Waste Management, Hasbro, Akamai, MGN, and Coke on Tuesday. CME Group, Heinz, Kraft Heinz Company, Lithium is on Wednesday. Twilio is on Wednesday. And Owens Corning is on Wednesday. Thursday, Arch Coal, Dash, Crocs, Deere, Shake Shack, DraftKings, Roku, Yelp. Friday, Cheniere Energy, right? C&K and PPL Company. More importantly, the economic reports, PPIs come out tomorrow, or CPIs, excuse me, come out tomorrow before the market opens. That'll be a big one. Retail sales will come out on Thursday. That will be disappointing, but retail sales has been known to be weak after Christmas. Industrial production will be more important than retail sales. And then Friday, PPIs come out with building permits and housing starts. That could be a scary day because we'll have lighter volume. On a 3-day weekend, big money will probably be out Wednesday, maybe the morning of Thursday because of the retail sales and industrial production reports. But probably could be a scary day on Friday because of low volumes. Don't need to overreact because if it is a big down day or a big up day, it'll probably correct itself on Tuesday. Interesting article, China may be making more advanced chips, the AI chips, despite U.S. sanctions. But there are bigger problems in China than being sanctioned for chips. And a very interesting article that I found, that Jeff Bezos sells nearly 12 million Amazon shares worth at least $2 billion. It's more than that. It was like 50 some odd million shares that they were trying to get through. Oh, he listed the proposed sale of 50 million shares around February 7th. So understand, Bezos is getting out. If you have your shares at 177, in the 170s anywhere, if you're even in the 160s, you've had a ridiculous run on Amazon. Don't hesitate to pull the trigger. I'm not saying it's going back down to the 80s or 90s, but it would not surprise me to see it back down to 125. when you have the founder selling off a fourth of his share count, it's got to be less than that, excuse me. Let me put it this way. When you see the founder selling off such a large amount of his share count, it brings concern to the stock. He told you at one time it's probably going to go belly up. This is where you're looking at it and seeing if there's anything different that you need to do, or if it's time to ring the register. It seems like it's time to ring the register. Would not surprise me if we saw this stock head back down to the 125s. All right, what questions do you guys have? What questions do you guys have that I could do, that I could try to answer for you? Jim, I think I answered your question there. And Stuart, I think I answered your question you had. Okay, so Lance just asked, so what are you going to do different? And Lance, there's nothing that I'm doing different at this time. We're already in positions that I feel, and I think you maybe missed some of these early January webinars, so head back to myhurleyinvestment.com. If you head back to myhurleyinvestment.com, you'll see where I think we're in a lot of undervalued positions. And again, I am a Warren Buffett fan, so my belief is that I want to be in undervalued stocks with huge upside opportunity. And I think we're in those positions. Those positions are our core holdings. And our core holdings, as I make everyone sick, our core holdings, Apple doesn't have growth. We have Bank of America, Boeing, Baidu, Disney, Google. L doesn't have a lot of growth. Neither does JP Morgan or Meta. But Micron, Square, and Under Armour all have doubles or triples in their near future. Am I starting to trim back Apple? Yes, I'm starting to trim back Apple because it's fully valued, and I want to find some newer opportunities. So Boeing, Bank of America, Baidu, Disney, Micron, Square, Under Armour, those are 7 of our holdings that have huge upside opportunity. So I would like to get out of some Apple and get into more Micron, maybe add some more Under Armour. Square as a financial is pretty good. And the one that I'm missing in here, sorry about that. There you go. Our energy oil one right there from 22 just to get back up to 29 or 32. It also has a 50% opportunity to the upside. So hopefully that answers your question where I'm not doing anything. I mean, how would I say this? The positions that I just pointed out to you, it might be really dumb to get out here after waiting 2 years to get here, and then you're going to miss out on all of this. That I can't do. That it doesn't make sense to buy high and sell low because you're impatient. So my suggestion, Lance, don't look for something new in what you might be doing personally. If you did your research and your numbers are still correct, stand by your work, stand by your homework. Be stupid to leave right now and miss your upside after you suffer through all the pain. Suffer through all the pain, sell it off, hope that you make money in something else. Seems like a pretty piss poor way to manage money. Don't do it. Don't do it to yourself that way. All right, no other questions came in. Guys, I appreciate you being here. Thank you very much. We will have a Thursday trade findings and adjustments. We've got it figured out with a GoToWebinar, so we'll have that fixed and taken care of, so it'll be the way it's supposed to be. Thank you guys for being here. I look forward to seeing you next week. Stay safe in the market, trade safely, and I'll see you then. Bye-bye.